Unified Payments Interface or UPI has revolutionized real-time payments in India. It's fast, secure, and available 24/7, allowing you to instantly send money just using your mobile number or UPI ID. No more complex bank details or delays. UPI transfers money directly between bank accounts in real time. And best of all, UPI is free for users, unlike PayPal, which charges fees for transactions, especially international ones. In today's video, we break down how UPI works and meets agreements, compare it with global systems like PayPal, Alipay, Venmo, and Zelle, and wrap up by exploring where India's UPI fits into the global payments. If you wanted to send money to someone's bank account, you would need to know their bank account number, the bank name, the branch name, and the IFSC code, which is like a postal code for banks in India. UPI simplifies all of this. It's like sending a letter, but instead of a full address, you just need a short code called a UPI ID, or even just a mobile number, and the system takes care of the rest. In seconds, the money reaches the right account. What sets UPI apart from other systems is that it doesn't hold your funds in the middle layer like a digital wallet before they are transferred. UPI enables real-time bank-to-bank transfers directly from one account to another. It's not just secure, it's efficient and cost-free for users. Now, before we get into the comparisons, let's see a payment processor, not a payment gateway. It functions more as a payment infrastructure or system that facilitates real-time bank-to-bank transfers. It's an interbank payment system built by the National Payments Corporation of India or NPCI. UPI acts as a network allowing real-time transfers between bank accounts using a mobile phone. It doesn't really process payments in the traditional sense like a credit card processor such as Visa or MasterCard. Rather, it facilitates direct, instantaneous bank-to-bank transfers. This diagram explains the flow of UPI transaction. Let's say you are using Google Pay. When you initiate a transfer, Google Pay talks to your bank, let's say ICICI Bank in India, through something called the NPCI, which is the backbone of UPI. NPCI then checks if everything is okay, like whether you have enough balance, and ensures the money moves directly from your account to the recipient's bank account, say HDFC Bank in India, and back to within seconds. Let's further break it down step by step. Say the payer or the customer opens their PSP app. Now, a PSP or payment service provider helps connect customers with their bank to complete transactions. For instance, in India, Google Pay acts as a PSP. So when you initiate a payment, it interacts with your bank to process it securely. In fact, Google's UPI app is linked with various banks. Similarly, PhonePe in India was linked with Yes Bank as PSP initially, now ICICI Bank in India. Once authenticated, the payer's PSP sends a payment request to the UPI network NPCI. This request includes the payers and pay's UPI IDs and the payment details. The UPI network first resolves the pay's address, mapping it to their bank account via their PSP. The pay's PSP verifies the pay's details and responds back. The UPI network then sends a debit request to the payer's bank, also known as the remitter or issuer bank, asking for authorization to direct the specified amount from the payer's account. The issuer bank processes the debit request, checking if the payer has sufficient funds and if the transaction is valid. It sends a confirmation response back to the UPI network. And after receiving the confirmation, the UPI network sends a credit request to the beneficiary's bank, also called the payer's bank, informing it to credit the amount into the payer's account. The beneficiary bank processes the credit request and confirms the successful transfer to the UPI network. The network then relays the successful transaction status back to both the payer's PSP and the payer's PSP, completing the transaction. In simpler terms, UPI is the infrastructure that banks and apps like Google Pay or PhonePe use to directly move money between accounts. UPI is not a digital wallet either. Money is transferred directly between bank accounts, whereas in digital wallets, funds are stored in an intermediate balance before being used for. One more important thing in this UPI diagram is that the customer also creates a virtual payment address or VPA through the PSP app, which links directly to their bank account. Once confirmed, the VPA allows secure payments without sharing sensitive bank details. For QR code-based payments, the customer scans the QR code, which contains the pay's UPA or details. It authorizes the payment with their MPIN or mobile PIN, and the request is sent to the UPI network via the PSP, following the regular transaction flow. Now, UPI operates through an API-based architecture. Every time you use apps like Google Pay, PhonePe, or Paytm in India, these apps are calling NPCI's APIs. These APIs do everything from verifying user identities through UPI pins to making sure the money lands in the correct account. Once that is done, the transaction is confirmed by both the senders and receivers banks, all in a blink of an eye. Behind the scenes, banks act as payment service providers or PSPs. So for instance, when you use Google Pay, ICICI Bank might be processing the transaction as its PSP, while PhonePe might partner with Yes Bank. These banks handle a request and interact with NPCI's platform to complete the transfers. To understand how UPI fits into the bigger picture, let's compare it to other widely used payment systems around the world. Each of the systems has a slightly different structure, but they all aim to provide seamless money transfers. And here is how to stack up. PayPal is a household name in the global payments landscape, serving as digital wallet, a payment gateway, and a payment processor. As a digital wallet, PayPal allows users to store funds and use them for future purchases or transfers. As a payment gateway, it connects merchants to financial institutions, facilitating online payments. And as a payment processor, it handles actual transactions by routing payments to card networks or bank accounts. Unlike UPI, PayPal typically holds funds in an intermediate balance, your PayPal wallet, before transferring it to your bank account. The step introduces an extra layer that UPI bypasses entirely, as UPI facilitates instant bank-to-bank transfers with no intermediary balance. For example, when using PayPal, you will usually link a bank account, debit card, or credit card to PayPal. When you receive the payment, the money is first held in your PayPal balance. From there, you can transfer it to your bank account or use it directly for purchases. In contrast, UPI transfers funds immediately from one bank account to another without holding money in a wallet. Alipay is China's leading payment system and is widely used for everything from shopping online to paying with QR codes in stores. But unlike UPI, it holds funds in a wallet before spending or transferring, adding an extra layer of friction that UPI skips. Venmo is the social P2P payment platform that's popular in the US. You link your bank account, debit card, or credit card to send and receive payments between friends or businesses. And there is even a social feed to share transaction details with contacts. However, like PayPal, Venmo holds money in your Venmo balance until you transfer it to your bank. While Venmo works similarly to UPI in terms of peer-to-peer payments, it often acts as an intermediary, holding money in your Venmo balance. Apple Pay and Google Pay allow users to make payments using their mobile phones by linking their bank account or cards. They work for in-store purchases using NFC or near-field communication, as well as for online payments. They use encryption and tokenization to ensure secure payments, especially for contactless purchases. But both Apple and Google Pay are primarily digital wallets for storing card details. In India, however, there is a UPI version of Google Pay, which integrates with the UPI infrastructure for direct bank-to-bank transfers. But in other countries, like in the US, it functions more like Apple Pay. UPI is actually similar to Zelle, a real-time bank transfer system used to the US, but the infrastructure differ. UPI is managed by NPCI in India. It operates via API-based architecture that handles massive volumes with low latency. Zelle, on the other hand, operates in the US using the ACH network. While both systems offer peer-to-peer transfers, UPI's API infrastructure allows for faster, real-time bank settlements, whereas Zelle's ACH network settles transactions in near real time. And if you're interested in learning more about Zelle and similar real-time payment systems, or want to dive deeper into how UPI was built, in my next video, I'll break down how a system like UPI can be built from scratch. We'll explore the APIs, infrastructure, and all the critical parts you need to consider. So don't forget to like and subscribe if you want to dive deeper into the world of